Ahoy there, traders, and welcome one, welcome all. You can see the room filling up quite nicely. Thank you, as always. I like to start off with a little bit of gratitude, appreciation. I'm not usually that type of person, but I do appreciate that we could all be doing other things with our time. But nonetheless, thank you for taking some time out of your schedule to spend it with me. So it is appreciated. Nonetheless, we've got a nice group of regulars. I see one or two names that are new. Alan, 2 or 3 Allens. I know one of you and maybe not the other. Glenn, Ian, Jim Kim. Wow, all the names are tongue twisters there. Can't quite roll through the list. Michael, Ron, Ruben. Hello, Ruben. Stephen. Another Stephen. Stephen S. Stephen C. Scott. And of course, Vito. You're always at the bottom of the list. You've got a double V, Vito. So it's I think you're always going to get mentions because you're at the bottom of the list. That's not necessarily a bad thing. Anyway, welcome everyone. This week we're going to go shopping for swing trades. So last week, let's just talk about that for a moment. We were discussing the correction. It's almost like we knew it was going to happen. I'm not clever. I'm not fancy. I'm just a poor farm boy who figured a few things out. But we were discussing about corrections. And the big hint, the big tip, it's a secret, is there's always one coming. There's usually one big correction every year. So I just want to remind ourselves, this is what we're talking about. And this is kind of like influencing this week's topic, which let's go and look for something to trade. Let's go and find something. And it's this, is there going to be a correction? Again, not like the crash over here on the left, more like these in the middle where we get these retracements. That's what we were speculating on. And guess what? Fast forward just a few days, it happens. You don't have to take my word for it. I mean, this seasonality, this is going back over 75 years. It's aggregating and normalizing the data. And you can see that there is a seasonal trend that is a phenomenon. And same thing in the kind of the middle of the year. The one that I've personally noted is there. I hadn't actually spotted that one in July, August. So it happens twice. There's 2 times a year that a major correction happens. So anyway, we've got it nailed. Again, it's not anything magic. There's no clever indicator. It's just when you've been watching the markets for any length of time, or you're a study of, or you make a study of history, you just spot patterns, and that's really what we were discussing last week. There's usually a correction at some point during the year, and we're due one. It's the time of year for a correction. So it's the time of year for corrections. Let's go shopping. That's what we're going to look at today. Usual agenda, if today is your first day, usual agenda is we're going to be talking about the markets. We're going to be talking about the markets for a wee bit. We're actually going to spend all the session looking at the markets and finding something to trade. So it's all kind of interrelated. We've got a few trades this week to look back at. So we'll have a little look at those. But for me personally, as I've already mentioned, I'm not a Wall Street guru. I'm just a poor farm boy who figured out which buttons to press, and conveniently they were in the right order. I cracked the code essentially. It wasn't an easy path. I did it through trial and error. I did it the hard way. But ultimately, I'm just a regular guy. I like a laugh. I like a giggle. I like cake. Cups of tea, I just like to relax. What most people would probably call me a lifestyle trader. I have my life first and trading second. It used to be the other way around. It would be trading first and life second. And it's a recipe for poor health and, bad decisions. But nonetheless, it's a different pace of life. I like to spend as little time as possible looking at screens, which means that I get to do things that I enjoy, and I really enjoy doing these sessions. So that's what I like to do. Anyway, full-time trader since 2001, hand-drawing charts since the early 90s. Call most of my trades out in real time since 2004. It's all on the screen there. I'm just trying to illustrate. It's not my first time doing this. I've been doing this quite a while. Mentored and coached thousands of students all around the world over the last 15 plus 17 years. I think I've been training people now. But I do truly want everyone to succeed. I've got a lot of time for serious traders. So if you're serious and you want to take it seriously and you want some help with that, send me a message. Nonetheless, shopping for swing trades. Now, we've touched on this in the past, and we're going to kind of recap our primary example of this. We're actually going to come back to this example as well. But shopping for swing trades, all this means is that we want to buy the dip. There's that phrase, buy the dip. We want to look for things when they're at a discount. If we're investors, we'd be looking for, huge corrections so that we can get a good business at a discount. If we were Warren Buffett, I'm not Warren Buffett. I'm just a swing trader. I look at the charts. I like those squiggly lines. But I want to be able to replicate the process. And that's like the big thing that I want for my own trading is, can I do it again tomorrow? Because anyone can get lucky today. Anyone can just pick the random right stock and get lucky. I don't want to be lucky. I don't want to wonder what I'm doing and is it the right stock and did I do it at the right thing? And, could I be doing something else? I don't want to spend 3 hours trying to figure out, is this the one? So I want to create a production line. I want to figure out what I'm looking for first and then go and look for it. So we need to know the end result first, but then we can kind of go back to, okay, how do we reverse engineer a good trade so we can scan for the footprints is usually how I refer to it. My own process is the first step, which is what we're going to look at building today, is finding something to trade. It starts off with a mechanical reason. And this really is from a time point of view, the secret sauce. It means that I don't have to look at 500 charts every day and wonder which one is the right chart. I can zero in on the 2 or 3, hopefully. Maybe there's a bigger list on some days, which we're seeing at the moment because of all the weird stuff that's going on. But I just want to be able to zero in on what are the 5 things, or what's the one thing that I need to look at today. That's how I do the day trade rooms. It's like I usually have a list of stocks, maybe about 10 stocks that are potential candidates. And it's just a case of like, wait for the mechanical indication that says, look at this chart. And we do it in the live sessions and the over the shoulder. That's what we're doing. It's just waiting for one of the next stages of completion. Next step is going to be visual confirmation. We're going to explore this as well. Visual confirmation is what we need. I don't want to take the tool, the mechanical part of the process for granted, because the downside to a lot of tools are, out of context, it might give you a false signal. So for example, a moving average, I like using them at the moment. I've not always used them, but that's the flavor of what I use right now. But if you looked at a moving average or 2 of them in connection with each other and they're crossed bullish or bearish, it would be the suggestion. They can be suggesting a mechanical directional bias, but when you visually inspect the chart, it's flat as a pancake. Netflix, for example, it's been in a range for 6-7 months. The average price is crossing back and forth. They're not telling you anything because they're useless when price is in a range. But when they're trending, they're really powerful. Next thing we want to do is trade the next pullback. We're in a market pullback. A correction is how it's phrased. So this is what buy the dip is. If the market is strong, we want to wait for it to retrace, and we want to buy weakness, short-term weakness in overall strength. That's what we're looking for. We're going to look at examples of all this. I'm just laying up the foundation. And then the final steps more to do with when we're in the trade. I have a rule set for this. It's TTE management. It's going to time out, target out, or exit out. If it goes up, down, or sideways, I know exactly what I'm doing and when I'm doing it. Because again, I want it for myself. It turns out that you guys and girls find that really beneficial as well, because if you're at the newer end of the spectrum, then it's easy to learn. It's rule-based, it's rule-defined. And even if you're more experienced, you just don't have structure to your knowledge, then this production line gives you structure to everything that you need to know. You can fit all the right elements into the right part, and bang, you've got your own production line. So that's what we're going to do. Now, we're going to focus on the first 2 points, the mechanical scan, the mechanical reason. I'm going to look for visual confirmation. So swing trade scans. We're going to look at twit. I'm going to run through this a little bit quickly because I want to get into the meat and taters of the scans. We've covered this at length on past past workshops, if you want to go back to what was it called, finding explosives, rather cleverly named, finding explosive stocks to swing trade. This week we're going to go and do it. We're going to go shopping. We've got the retracements, but what we want is the footprint. And one of the things that we discussed at the time when it was unfolding around about here, just to date stamp at the beginning of 2021, this is when Donald Trump was kicked off Twitter. Essentially, that's what happened there. You might recall it was a bullshit piece of news. It doesn't matter whether you're for him or against him. It doesn't matter. The news was nonsense, but the stock reacted negatively. So we thought that was bound to recover. So it was a little bit of a news-driven event. Just putting some context on it. We don't need to know what the news is. It's just we happen to know what the news is on this occasion. But what we can start thinking about is layering on, well, if this is the perfect scenario, the perfect situation, we can start to break this down into, and this is the same chart, just zoomed in a bit, we can start to kind of put a break, markers, footprints in the way so that we can start thinking about a scan, because we want to take this picture and then look for similar things over here on the left, because I don't want to look at every chart every day all of the time. I want to go, here's 5 stocks that make most sense today. That's what I want to look for. But I need to start with what I'm looking for. I'm looking for this specifically. I'm looking for times where the average prices have crossed up. In fact, I've already got a slide, a little widget here. We're looking for times where the average prices have crossed up. Great. We're going to be up a certain percentage in the stock's value. So the average, the short-term average has crossed over the long-term average, and this is just the 200 period and the 50 period moving average. There's a dotted line, which is the 20, but the standard combination of indicators, essentially. Now, to help us avoid those false starts where average prices just cross over, we want the directional bias of being in effect for 2 months, about 40 days. And we can scan for these things. And then we want to look for the retracement. And this is the bit that we're in right now, the retracement that we're in right now. So that's what we want to look for. And we can look for this rally retracements again. We can look for that footprints all along. So that's the ebb and flow of what we're looking for, the retracements in the context of a trend. But this is, like, you know this, like I know you all know this. You're all, whether you're it's your first day or your first year or your first decade doing this, this is what buying the dip is. This is what trading the trend is. But what I would suggest to you is go further, go deeper, go look at more detail. Again, we've already started to say, well, not only do we have to have the average prices crossed up to look for a bullish trade, I need a certain time of that cross to have been in effect. So it's not a brand new crossover. I also want to look for a certain measure of movements upwards in that trend. So I want to know that price is actually moving. It's trending, it's going up. And then in the short term, I'm looking for that retracement. And what we did last time is we defined a retracement of 10 days and 10%. Don't have to use 10 days, could use 15, could use 5, could use 4. Don't have to use 10%, you could use 12, you could use 15. Pick something that makes sense. I wouldn't go lower than 10 days and 10%. But we want to see a retracement in 10 days of at least 10%. And that's what we've got marked off in these yellow boxes. These are all down 26% in a few days, down 19% in a few days. And when we come to the live partner chart, you'll see that that's kind of what we're looking at on Twitter now. But that's the footprints. Now, what I've got here on the left, and this is the example that we went through a few weeks ago. That line that's highlighted right there in the watch list. So I know what I'm looking for is the point. Again, I am intent. I appreciate the comments. Can we slow down? I've covered this over an hour previously. I'm just recapping so we've got a little bit of continuity. We know what we're looking for, because I want to go and actually do this and not talk about the theory. So I appreciate that I am going fast. It is being recorded. You don't have to take notes. So it'll be processed and ready to watch the replay in a couple of hours' time. So don't worry about the speed of this. This is just the theory. Let's get through the theory, and then we'll go and do it, and you'll see it lots of times. So these red and blue boxes on the left here, this is the watch list. So I want to find this pattern. So this is Twitter on the chart. TWTR is the ticker. So I want to find that one of these footprints, but I want to find it on something other than Twitter. And the example we've gone through is HES. And this going from right to left, that column there, the rightmost column, just bear with me. Let's see if there we go. That's better. So the rightmost column is saying bullish. So that first one is saying the average prices are going up. That's what that's telling me. Great. So that's the first step right there. The next box is saying it was in that bullish average price crossover for 37 days. Okay, so close enough. It's at least 37 days. And then I've got another column here. Now, obviously I'm scribbling over this, but it's saying it's up 56% or 52% in that same period. So about 52%, and I can say in 90 days. So it's starting to look like the footprint is very similar. It's up in the prior 90 days, it's up 50%. When I was doing this slide, I just measured it from the average price crossover, just so it was easy to calculate, because that's not going to change. There's no discretion involved. It's like that has happened. So that's what these percentages are. It's from the cross points, but nonetheless, it's going up is the point. It's going up. Average prices are crossed. So then we can see that we've got a little bit of a retracement. Let me just tidy up now. We know where we're looking. So that's where these next three columns here are. I've got where is price in relation to the averages. So again, right from left, price is above the 200, it's above the 50, but it's below the 20. So it's in that zone there. So let me just do this. So it's above the 200, it's above the 50, but it would be below the 20 period moving average. So to do that, it must be there in the sweet spot. So it's retracing. So that's what these rows mean. You can do all of this. This is TradeStation. You can do all of this on FinViz. You can do all of this on FinViz. I'm preempting the question. I should have prepared it earlier. But you can go to FinViz. It's I'm not affiliated with them in any way, shape, or form. FinViz, they just have a free online scanner. I'm just getting it ready now. And you can do all of this on FinViz. You've got, okay, Screener, finviz.com, financial visibility, FinViz. Screener. Okay, I get it. Ads. That's how they get. So what you can do here, go to all instruments. So all I've done is gone to FinViz, gone on to Screener, gone on to all, and then you can see here 50-day moving average, 20 period moving average, 200 period moving average. You can find all of these things. You might need to add in stock volume. You can add in all sorts of things. You can have a stock that is over 20 but below 50, or over 50 but below 100. You can put anything you want on here. There's lots of things that you can do, but just to replicate this scan, and then you can do something similar, is, you can put those same things here. Simple day moving average, price is above it, it's below it, it's near it. You've got lots of choices, so you can do all of this with a free tool like FinViz. So again, you don't need TradeStation. Anyway, what we're doing, I use TradeStation. So that's what I'm looking for. So HES, let's go and look at it. So we've got our scan, we've got what I'm looking for. So now's the time I'm going to look at the charts. So this is what we were looking for. That was the The watch list on the left is the scan that we were looking for, and clicking on the chart, this is what it looks like. So we've got our average price crossed over. We're about 37 days in trend. Check, it's going up. Visually, we can see it's going up. It's actually going up. It's up about 44% from the cross. I know the watch list said 52. 52 is in the last 90 days. That's just how I set the tool. And we've got a retracement in the last several days. It's below the 20, and it's also just kicking back. It's starting to resume its upward trend. So that's how we can find it. And again, this is what it looks like in real time. And again, we were modeling a chart that looks like that. So, and we found a section, we found several stocks that looked like that part of our footprints. So let me pause there. Again, I've gone through it very quickly. It is being recorded. Don't worry about taking notes. Does the theory make sense? We're looking for a footprint. Average price is crossed higher. The actual price is moving higher in the last 60 to 90 days. The average prices have crossed over for at least 40 days. And then in the last 10 days, price is retracing. That's it. That's essentially it. Takes longer to explain than to do. We've really just got a few criteria. Long-term directional bias, it's actually moving up, and then we're looking for a retracement. And I can do all of that in the watch list on the left. Let's go and do it. Whew, let's do it. Right. So let's think about, so again, this is Twitter right now. This looks familiar. Have we seen this before? So this is the updated Twitter example. When we did it, it was about there. It still is, but we're up 147%. So there's the latest blip. And it looks like that rally is looking a little bit steeper than the others. So I would imagine that we're going to see price retrace and then go sideways. There's going to be a little bit of depth of retracement, which is what we're seeing right now. And there's possibly going to be a little bit of a time retracement, just meaning that it's going to move sideways. Because normally when prices get overextended, prices tend to rest. So we found Twitter. Let's go and take a look at Hess, because we looked at that a few weeks ago. Ta-da! There's our example. We called it in real time. There's the crossover. It was going up. We've got the up 44%. We were looking at it when it was down 18%, and it was just going back. You can't quite see it because it's dotted. Just going back above the 20 period at that point, and then we got our rally. So we've got that phase of the trend that we were looking for, that first movement. So for the next leg of the move on HES, we want to see it come back. We want to see it retrace back between the averages. We can see that it's not doing it yet, and it might not do it at the moment. Again, the sector, because I think this is in the energy sector, and the energy sector is quite strong at the moment. So this move doesn't look like it's over yet. But nonetheless, that was what the example that we found. At the time, we also looked at KKR. This is another example of just a few. I think we looked at this last week. But again, just another example of, well, we've got a long-term trend. Long-term trend, you could argue that this is a little bit of an angled range. You've got a very clear, strong thrust move. It's retracing. It's back to the 20-period moving average. And it looks like, as you can see, it's not participated in the big retracement that we saw in the last few days. It was actually showing strength. So this might be ready to explode. This is one that I'm looking at right now. So let's try and find more stocks like this. So again, let's look at, let me just scroll across. So let's look at stocks that are moving. There we go, get that extra column. Right, let me take you through it. So this column here, so where we can see the whole word bullish, it's telling me that the average prices are crossed higher. So that's what I'm looking for. So if I want to find a bullish trade or a bearish trade, I can sort by which stocks are bullish and which stocks are bearish relative to their average price. So that's the average price column, that one there. So really easy. And we can see that, hey, if I'm looking for a bearish trade, maybe I'm a little bit heavy on my bullish portfolio. There's a few candidates in my little universe of stocks. I'm only looking at, just for reference, I'm only looking at the most liquid, the best stocks, if you like. And they've got a certain value. So I'm only looking at 250 stocks there. I've got a secondary list of stocks that are, under $50 or not that active. So there's, I'm only looking at 250 stocks for reference. That's my universe. That's available for free on my website. If you want to go to it, feel free to. AntiVestor.com. Just go to the header bar and it'll say free stuff, and one of them will be a stock list. So let's think about bullish stocks. Let's find those stocks that look like Twitter. So let's put Twitter, TWTR. So that's our model. That's what we're looking for. And we're looking for something that's in one of those segments. We've got 1, 2, 3, we've got 4 areas right now where prices are doing something interesting. So we've sorted the stocks by, are they bullish or bearish? So let's just focus on the bullish side. So what I'm going to do is scroll down, scroll down, scroll down. So I've got a lot of stocks, and I'm just going to put a little break here. So I'm now not looking at the bearish stocks. The next thing that I can do is sort by how many days in trend. So all of these stocks now are sorted by this number. Okay, have they been in a trend for, again, remember, we're looking for about at least 40 days. Now, there's only 2 or 3 that are, there's only, my apologies, there's only a few that have less than 40 days. So what I can do is, if I sort them the other way, I can put them at the bottom and I can just chop them out the list. Let's be clinical about it. Let's do 40 days. Right, so now go back to the top. So now at the top down, these are all the new stocks that have been in a trend for at least 40 days by the moving averages. So the first thing that we've done is we've done this criteria. The average prices are going up and we've been in the trend for about 40 days. So average prices going up, in the trend for about 40 days. So we've just done that first part. That's pretty cool, right? So nice and easy. So what's next? I want to see price above the 200, above the 50, but below the 20. Above the 50, above the 200, and below the 20. Because I want to know it's retracing. So that's what I can do next. So this column here, this next column, the one that I'm highlighting, that one there, that's the, where is price in relation to the 200 period moving average? So now I can sort that and say, okay, is price above the 200 or below the 200? And guess what I'm going to do? I'm going to scroll down. I'm just going to snap off all the bears. So now I'm just looking at stocks that are above the 200 period moving average. The middle one is similar. All the stocks that are above the 50 period moving average. We can scan for those in a moment as well, because maybe there's a deeper retracement. But now these are all the stocks that are meeting that criteria. They're in bullish states of average price. They're at least 40 days in trend. It's above the 200, above the 50, but below the 20. That's what we've done here. So we've got this blue, 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 and then the left column's red. It's simplistic, but that's what I'm looking for. This is how I'm scanning. So what I'm expecting to see is a stock. So I only need, before we go any further, does everyone get the points? I've taken 300 stocks down to 23. Yeah, about 23 stocks. So I've taken 300 stocks to 23. So I only need to look at those stocks. I can eliminate things further, but I only need to visually inspect. Do you think that that's easier to do on a daily basis? If you're pressed for time, and you've got 30 minutes in the day to kind of like, is there anything for me to do today? Is there anything for me to do? Like, which stocks do you want to focus in on? Do you want to focus in on like which of those 300 and then go and visually inspect? Or would you rather then go and either further filter that list of 23 or go and look at that 23? You can easily find things that make sense now because they're putting in that first leg of the retracements. So what I'm expecting to see is a stock that's up, that's retracing. So maybe it's at that point of the chart here, or is it's retracing here. Now on this one, it's below the 50 as well. So you got the 20, you got the 50, but it's above the 200. So we can find something in that state that's in a deeper retracement. We can do that. Similar here, it went below the 20, below the 50. But what we can do is we can segment those so that when it goes back above the 50, that's when I'm interested. So now we've got all the work done. This second list, this list down here. So we've got below the 20, below the 50. That's what those two columns are showing. And then the center column there, it's above the 200. So what I can do is when that middle column goes from bearish below the 50, when that turns to bullish, I can then inspect it. So I can keep those on, ranked and sorted. So rather than look at all 100 plus stocks that are on that list, that's not a good use of my time. But what I can say is, okay, well, when it starts to resume a favorable move, so that's what happened over here, for example. So it was below the 200. Sorry, my apologies, below the 50, above the 200. But when it started to move higher above the 200, so at that point there, that's when it's resuming its uptrend. That's when it will flag up over here into a blue column. You'll have a little blue there or a blue there. That's what it would look like. Does that last part make sense? How do we, because I still don't need to look at these stocks. I can just like say, okay, now that I've done that sorting, when one of that changes states, that's when I'm interested because it's now resuming and maybe I can go and look for my entry. Let me just pause there for a drink. Let me see if there's any questions. Just give you a moment to type something. Ron, I see you've raised the hand. We've got the hand function thing. I don't know if there's a question. If you've got a microphone and you want to hop on, Ron, if anyone does actually for that matter, I can just allow the microphone privilege. And if you want to ask a question, by all means. So let me know in the chat box and I'll just allow to talk. Right, just pausing. Okay, nothing on the question box. Okay, it's all in the chat. Cool. Right, so I think that makes sense. So we're looking for something that's in one of those states. Again, just for illustration, let's just focus our attention. These are, where are we? So these are the stocks that we're interested in. Now, what I could also do, which ones am I going to look at first? Which ones am I going to look at first? Let's say you are pressed for time and 25 or so stocks is too much. I can look at that column here and it will say, or suggest, has that retracement finished? That's what that column's telling me. So I can, if I just draw it on the charts, if price is retracing, then what that column is telling me is we have a spike or a sign of exhaustion. And it might just be saying, hey, you know what? That sell-off, it looks like it's over. That's what it's telling me. That's what that is a potential indication of. We don't always get it. So like here, you don't get that indication. But here, you've got one there. That's what it looks like. You've got spikes or a hammer, a doji, one of those fancy candle patterns, but essentially we're looking for small body and a big spike, and the spike needs to be on the lower portion. And we can see that this here is telling me that we've got two candidates. There's two bull spikes. That's just my terminology that I use to say the spike is on the lower portion. So I've got two that I'm potentially of my 25 stocks to go and look at. Again, keep in mind, this takes longer to explain than to do. And you saw, again, I appreciate we're going through it reasonably fast because I want to go through it and look at charts and find something to trade. But is there anything that needs my attention today? Okay, so maybe we're going to look at KMX, CarMax. So what we can see here is we've got that criteria. The average prices are up. It looks like we've got almost there. So we've got from there, we're definitely moving. Visually, we can see that we're trending. Cool, that's awesome. And we're just resting. This is what I would call a time retracement. It's not necessarily putting in a depth of retracement, but it certainly is taking its time moving sideways. So we've got it resting in an uptrend. And these spikes is what I'm looking at. So yesterday we had a sign of exhaustion. Visually, we can see it doesn't look like this is participating in the sell-off that we've seen this week and last week. So maybe this is a good candidate. It's not an immediate buy, but what I could simply do is say, okay, well, if it goes above this little cluster here, which is where the average price on the 20 started to roll down, I could say, if it goes above, say, 124, then I'd be thinking about being bullish. If I wanted to be a little bit more conservative because it is going sideways, I could say, I think I'll wait until it breaks a new high and trade the breakout of this very small consolidation. So maybe it's above 130. There's two choices. Which one's right? It really depends on how aggressive or conservative you want to be with an entry. If you want to kind of get in now and be a little bit adventurous, that's okay. If you want to be a little bit more conservative, that's okay. Choose your preference. But we've got one quite quickly that looks similar. Now let's go back to Twitter, TWTR. Let's see if it meets that. Does it look similar? It kind of looks like the early stage here where price meandered sideways and then rallied and retraced. So we've got that kind of footprints at the early stage. So it's not quite in the same way where we've got a nice lazy trend. It looks like it's trended, retraced. There's that sideways that we were just talking about. So it's on the next leg, time retracement. It's just moving sideways. It looks interesting. It's clearly doing something. So that looks good. Do I need to do anything about it today? Probably not. But it looks good. It looks good. Let's check out Triple M. So why Triple M? I'm looking at it because mechanically it looks like the same. Mechanical reason to look at the charts. In average prices crossed higher. In the average price states of bullishness for at least 40 days, check. Visually, it's going up. Not by much. Let's throw the question open. Mechanically, it's checking the boxes. Would everyone agree it's checking the boxes? But visually, the visual inspection, I think we've seen better. What do you think? I think we've seen better. So this is why I have in the production line, mechanical scan. Okay, we found something. Let's go and look at it. Visual inspection. It looks like a bag of nails. Now, here's the thing, the next thing. This is what most traders, investors, new or old, one of the reasons why most people fail at this game is they don't recognize that this looks like a bag of shite. Quality control, TWTR. This is the best thing that you've ever seen. This is our benchmark. Make sense? This is the benchmark. Does it look like Twitter? Several no's in the chat box. Yeah, awesome. Several no's in the chat box. Does Triple M, MMM, does it look like Twitter? No. Okay, let's go back to KMX. Does it look like Twitter? Well, it looks significantly better than Triple M. It looks a lot better. It's not quite the same. Let's go to Hess, which is the stock that we found a few weeks ago. Does Hess look like Twitter, the early stage of the Twitter trade? Yes, it does. It looks pretty cool, pretty funky. Okay, so we've zoomed in on one. If you're pressed for time, you can leave it there. Go for something else. Now I've got a little bit of extra time. We've got another 20 minutes together. What we're going to do is we're going to look at these 20 trades mechanically, and let's see if we can visually shortlist these. So I'm just going to give myself a little bit of space. So I'm just going to look at these 20 stocks here. That's all we're doing today. That's all I need to look at today. Tomorrow, there might be a new batch of 10 stocks. But ADM, Archer Daniels, average price has crossed up. It's in a trend for at least 40 days. It's in a trend for 140 days, to be precise. It's visually going up. It looks like it's trending. It's resting. It's trending. Cool. So we're back to that trending state. We've just dipped into the below the 20, above the 50, above the 200. So that's exactly where we want it. It doesn't look like it's finished its retracements, but let's look at the last time it did that. So let's look for clues, visual footprints. The last time that it did this, the last time that it came, let me just tidy up. Let me just do this. Let's look at the last few times that it came back to the 50-period moving average. So we've got a footprint. It looks like it rests for 2 or 3 days. Can everyone see that? Looks like it just rests for 2 or 3 days. And then it carries on. And then it carries on. Okay, it doesn't quite follow through there, but then it carries on. So it looks like it rests for 2 or 3 days. So we don't have to do anything today. It looks like we're going to have at least 2 to 3 days where price just rests. And if it does pause here, I'm looking at this one. I'm looking at the last time it retraced, and it just paused for 1, 2, 3, 4 days and then took off. So maybe on Wednesday next week, that's the time to think about an entry on ADM. Does that make sense? So I like ADM. I'm going to separate that out, ADM. I'll add it to a separate watch list, but I'll just put it here for now. Let's check out AMAT, AMAT. Same deal here. This looks good. Average price crossed up. It's what we want. It's in a trend for a while. Visually, it's going up. Visually, we can see that it's zigzagging and retracing. Okay, it's putting in a retracement. That's looking good. Below the 20, above the 50. So we'd like it to stop here for preference. It looks like it's continuing its retracements for the moment. Looking at the last few times that it's retraced, same thing. It looks like on that retracement, it just paused for about 5 days this time. So maybe the trade's not today, maybe it's next Friday, but I like this. This is a great example of buy the dip. It's not a today trade as I like to say, but it's a serious candidate. I'm looking for one of my 9 entry patterns that I like to use, which are all variations of a pullback, but it's just like today's the day. And all I'm trying to do is like you can look back at clues like what happened last time. Okay, it did that last time. It did that the time before. It just paused for 2 or 3 days and then it took off. So that could be a clue for me. Again, I like AMAT, so I'll add it to a watch list. I'll come back. Baidu, we want to carry on. So Baidu's putting in a deeper retracement. Now, what we can see here is, again, while we've got the same, it looks like it's been above the 20-period moving average for a long time here. And now we're coming back to the 50. So might it be that we're looking at a deeper retracement? Certainly the theme on this stock is a little bit different. I would suspect that we would see price rest first. And all I mean by that is a time retracement. So a little bit of a consolidation first is what I might anticipate here, because while price is below the 20, it's closer to the 50 than the 20. It's not just nudging it or just dipping below it. It's gone through it. It looks like that theme, that strong trend has broken for the moment. So I'll just skip over that. Again, I'm looking at something to do today. We've got our criteria here. Prices continue its downward march. So maybe that trend is not necessarily over, but you'd have to imagine it's going to do something like it did here. It's going to rest for a while before it does that, because we're putting in a deeper retracement. The average prices are quite far apart, so maybe they need to contract a little bit like they did over here before the next leg of the movement carries on. So again, I'm not going to worry about that just yet. Let's take a look at Disney. Now, Disney looks like a better example. We've got the visual trend. We've got our average price. It's been in a trend for at least 40 days. We've got a nice rally, retracement back to the 50. So we've got that. So we're currently below the 20-period moving average and still above the 50. That's cool. That's what we want. So we want to see price turn around. So again, we got one of those little spiky bars there. It did it last time. Spiky bar just before it started to move. And this looks like a good candidate. So let's pop that on the watch list. This was Disney. Let's check out Dix. Dix is next. Everyone likes to look at Dix. So we've got our average prices. Can everyone see the theme? We're doing the same thing. We've got a rally. We've got, that's what I mean by rest. So it's gone below the 20, below the 50 there. It did a time retracement. It just rested sideways. We'll call it consolidation. And then it resumed, which is what it's doing now. We can call this a breakout. We've got this moving back to the 50-period moving average, which is okay. So this looks like a lovely bull flag as a continuation. Let's play spot the difference. So we've got rally, flag. We've got this rest. Again, just note the sections on the chart. Just prior to the average price crossing up, we've got this rally. We've got this sideways, this flag, this rest. Those two parts of the chart look very similar. Can you see that? They look very similar. What happened last time to predict what could happen next time? So we could anticipate that this time. This is as complicated as I like to make trading. Look for clues in history. If they're there, they're not always there, but look for clues in history to suggest that could happen again. That could happen again. I like Dix. And if you like Dix, maybe you should put it on your list. Yes, I'm very well aware I'm a naughty child. I don't care. It's my show. I'll do what I want. It's just a play. It's just words, folks. It's just words. Trend. We've got time in trend is good. We've got the similar thing there. We've got the rally. We've got the retracement from last time. We've got another rally. A time retracement this time. It looks like it's just going sideways. In General Motors, it looks good. Can everyone see this visually? These are good candidates, good examples of our reference. Again, remember our reference was Twitter. TWTR. Let's go back to Twitter. So our reference was Twitter. So that's what we're looking for. And now we're finding several examples, several illustrations of similar footprints of stocks that might be ready to go again. Are you ready to go again? Again, come back to Triple M. Triple M made the footprint, visual inspection, looks like a bag of nails. Can everyone see the difference, the quality? This is why we do the visual inspection. I want to pause here. This is probably more important than the 5 stocks we've chosen. This is what not to trade. And I want to reinforce the message again. The hardest part for most traders to do is to go, this looks like something that I don't want to trade. Because most traders will look at a chart, any chart, and go, how can I trade this? And then spend the next 3 hours trying to figure something out. It's not there. What is? Let's go and look at Disney. Let's go and look at Dix. Let's go and look at General Motors. They look like there's the trade. There it is. It might not be today, but it's probably going to be in the next few days. Probably. I can't say for certain. I don't know what's going to happen tomorrow, but it's the best I can do. But quality control. Let's go back to Triple M. The action that we want to take here on this stock is to go, you know what? That looks awful. Stuff it. Let's move on. Next one, MU. Now this looks like another good candidate. It looks like all our selections are looking good. Again, we don't have to do anything with them immediately, but now this short list of stocks that we were thinking could NTR. There we go. This list of stocks that we were thinking could be interesting is looking interesting. We've got several candidates. Now, this Philip Morris, it's kind of similar. It's looking more like Triple M than Disney or Twitter or Dick's or General Motors. It's looking more like Triple M. Like, experience is going to tell you, like, maybe I can trade this. And if you're at the newer end of the spectrum, maybe you'll leave it. If you're at the more experienced end of the spectrum, you could probably find a way to trade this. But if you don't see it, guess what you're going to do? You're going to move on. We've found 5 or 6 other things that look far, far better. And as I'm talking through the charts, you know, we're kind of spoiled for choice. But now it's, well, I don't have to worry about the other 265 charts or whatever. I'm only focusing on the top 30 stocks. Snap looks like it's continuing to sell off. I don't need to worry about this today. Why don't you need to worry about this today, Phil? Glad you asked me that, I'll tell you. It's just nudging below yesterday's low. So it looks like that retracement is carrying on. I'll pick it up on the scan tomorrow. I only need to look at these 25 stocks. Don't need to look at all the others. But of those 25, I've got 5 that, you know what, I could probably just keep an eye on those. Again, Twitter looks like it's continuing to retrace. Twitter, Snap, we could probably, because we've got several in the social media sector by coincidence, highlighting, we could probably go and take a look at Pinterest. We could probably go and take a look at Facebook. Let's do that. Let's take a look at pins. You'll pick product knowledge up. Again, I can see the how did you know. Pins, it's just in the sector. You'll pick it up over time. It's just one of those things. Pins doesn't look great. Let's check out Facebook. Also in the social media sector, looks awful. Leave it alone. So there's nothing in the sector for us to worry about. I call that chasing Alice down the rabbit hole. We've covered that again on a past presentation. We've got WDC, Western Digital. Looks like it's had a great move. Average price, rally, rest, time retracements, rally. Looks like it's starting a time retracement, doesn't it? Looks very similar to last time. So how long did it last time? About 2 months. Well, this one's probably going to last 1 to 2 months. Great. I probably don't need to worry about that today. Unless something funky with the news comes out. I'll keep an eye on it. I actually do like that, but it's not something I need to do today. So I can move those top 5 stocks. Last one. I can move those top 5 stocks onto a watch list. I can just copy them, paste them onto a different watch list to say, hey, you know, these are the first things I'm going to look at on Monday. Is it today? With new information, should it stay on the list or should I scrub it? Okay. Tuesday, do I need to put the trade on today? Does it stay on the list? Do I come back on the list? And this is how we're going to create that watch list of things to trade. And it means that I don't have to look at every chart every day all of the time. And yes, I'm going to miss opportunities. I'm going to, I could have traded that. You don't want to get into the habit of playing the if only game. I can only trade what I'm looking at. And I don't want to look at every chart every day all of the time. I just want to zero in on what makes the most sense. And a lot of the time, all of these things look the same. And again, there's going to be 1 or 2 that slip through the nets because they're the mechanical footprint part of the process that we're looking for. That mechanical first step doesn't get triggered. So it doesn't make the mark on the shortlist. But if you'd looked at it specifically, it would have been, oh, that's a wonderful chart to trade. That's going to happen. But you know what? The times that it does happen, it's not worth stressing over. So don't worry about the trades that you overlooked because they didn't meet that mechanical criteria. But there is 5 stocks. Sorry, how many have we got? We got 1, 2, 3, 4, 5, 6, 7. We've got 8 stocks that we can go and look at. We can check in on a regular basis. It doesn't look like we need to do anything today. But I can also, you know, I only need to come back to those tomorrow. The others don't look that interesting. They don't look that great. So I don't need to worry about them today or even next week for that matter. I can do this scan every day if I wanted and say, is there 2 or 3 things for me to do? We've got a lot of choice at the moment, mainly because of the market. The markets are selling off. The markets are or have been doing that retracement. That's what we've been, surprisingly, that's what we've been talking about as potentially happening. That's what we talked about last week, and that's why we're doing this week. So where were we? So yeah, so this is the correction coming? It's happening. We're looking at it right now. This is what we're waiting for. This is what creates opportunities. These bigger market-wide corrections, they happen twice a year, usually either at the beginning, February, March direction, or around about September, October. They happen, they're cyclical. Again, this chart, to remind ourselves from last week's presentation on is the correction coming? They happen once, sometimes twice a year. It's usually once. Obviously, it can skip a year. It's not set in stone. It's not guaranteed. We've looked at the examples last week, but just keep it in mind. This is why we're doing it. This is the opportunity. And this is why we're seeing several examples today on today's opportunities and setups. We've got multiple candidates that look interesting. And this is how we find, to be fair, this is how we find our, like the charts, the stocks that we find every day. So I'm looking for swing trades. I'm also looking for day trades. So those stocks, those 5-6 stocks that we just found today, I'm going to keep an eye on them for the day trades. That's how we find stocks like BA. This is something that we traded early in the week. It was a great candidate, a great setup. There was more than a day trade potential. I can keep an eye on this. And maybe there's a swing trade, and I can scalp into the swing trade if it's available to me. Same with DraftKings. This was a breakout trade. We found it early in the week. The daily chart at the top left here, you can see that the average prices are going up. We've got the buy the dip opportunities. It broke to a new high. It met our day trade criteria, and we've got the broke statement right there. So we can look at these things for more than a swing trade, more than a day trade. So even though this was a swing trade, like let's go shopping for swing trades. Like if you want to trade on the lower time frames as well, that's okay. You can do that. If you've got time, great. If you don't have time, trade on the daily charts. This is also one that's set up on the swing scan. It also met the day trade scan. It didn't work out. And that's okay. They're not all going to work out. We had Alibaba yesterday on the bearish side. This was a phase 1 bearish trend. We talk about this in the basics training. PDD, this was on the bearish side. This was, again, phase 1 trend. We had a good setup. But it's these types of trades that we find every day. And it all starts with, let's find something to trade. In this case, let's go shopping for some swing trades. But if you want to trade other ways, if you want to trade the day trade opportunities and the swing trade, like I do both at the same time, it's just the best use of my time and resources. If I can day trade into a swing trade while I'm day trading, that makes perfect sense. You don't have to swing trade. You don't have to day trade. You can do one, you can do the other. And what I'm trying to illustrate is you can do both, like make the best use of your time and resources. And this is pretty much what we do. We usually do these sessions in a little bit more detail where we go and actually look for something to physically trade on the day. We do them Monday to Friday. But if you need some help with your trading, if you'd like to learn more about this strategy or the day trade strategy, and you need some assistance with that, and you want to learn about the perfect day trade or the perfect swing trade, and you want to learn in that smartest way possible, and get help following the footsteps of someone who's already done it. We find the best stocks to trade, the best times to trade. We have it's basically one entry pattern, but there's 9 variations of it. We've got a fully fledged trade management system, the TTE management. It's going to time out, it's going to target out, it's going to exit out. We've got rules for all of these. I promise to everyone, you're going to never worry about which way the market's going, up or down. Yesterday, everyone was like falling out the apple tree yesterday because there was the market was moving. Like you won't have to worry about that. I'm in the UK. I was enjoying my evening as the US markets were taking a little bit of a tumble. It was of no consequence to me. It doesn't matter which way the market's going. You're never going to flick through hours of chart after chart after chart. We should do what we've just done, zero in on the best opportunities for today, either do something or not do something, and then come back tomorrow. That's what we should do. And more importantly, this is my important one. You'll never read through company reports. I don't want to read through the financial statements. It dries my eyes. I'm not interested in it. I don't care what the company is. I don't care who the director is. But if you like doing that, you can do it. I just don't want to do it. It's not critical to our success. Anyway, if you want help building your trade confidence so that you can transition into the best possible trader that you can be, like, send me a message. Like, I don't know if this is right for you. I like to have a chat with everyone to make sure that it is the right thing for you. And if it is, we can talk a little bit longer. If it's not, that's okay. I'll always try and point you off in the right direction. I mainly offer that to everyone because I never had that when I started out. I remember, asking the person who got me interested in the markets outright refused to help me. You've got to find your own path. You've got to find your own way. And he would not help me in the slightest. But that was it. So I didn't like that experience. I just wanted to know that there was someone to ask. So anyway, if you need some help, you want to know if it is right for you, send me a message, phil@antivestor.com, or you can go to the homepage of the website. You can go to if today's the first day, you can go to I Need Help with the Basics. It actually explains in the basic training the usage of the trend phases, the use of those moving averages. And for most people, that's enough. If you'd like to learn a little bit more about the day trading strategy, how we profit at the open, which is the slides that you saw earlier in the trades that we took. And if you just want to look at the swing trading, then you can do that. Choose your own adventure, whatever it makes the sense. There's some information about each of those on those pages. And then if you want to come back to me and say, okay, well, I've got questions, Phil, let's talk. Great, let's do it. phil@AntiVestor.com. Right, folks, with that all said and done, that was shopping for swing trades. We've got 5 or 6 candidates. And what I'll do for everyone here is I will post them in the Slack group. So these are the stocks that I'm looking at. With me. So if you're not in the Slack group, feel free to join. There's a link in the bottom of my emails that will say join the community. And if you want to have the list of the stocks, it's going to be right here. List of stocks from the workshop. There we go. It's there, right there. So if you're already in it, great. That should have popped up on populated Slacks. Just a little chat tool that I use. And just means that I can communicate. If you'd rather send me a message there, lots of people just send me direct messages usually if they've got questions or comments. We've got some private member areas for the various strategies that we have, but ultimately the workshop replay will appear here. And obviously here's the list of stocks that we have there. Right. So with that all said and done, I think I'm done. It's a wrap. End scene, fade to black.